Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about a different stock, METROMILE, going with the ticker MILE. Now in this video we're going to go towards due diligence, technical analysis, and what I think about this one. So without further ado, let's jump right into this one. So METROMILE, this company here really works against the traditional car insurance. So for instance, a traditional car insurance basically is seen as unfair by this company to most consumer, leaving 65% of drivers to overpaying for auto insurance. While METROMILE, your rate is based on actual driving habits. Our customers save 47% on average compared to what they were paying in the previous auto insurer. So how does pay per mile car insurance work? You pay a low monthly rate plus a few cents for each mile you drive. For instance, it's around $29 monthly rate plus 450 miles times 6 cents cost, you're paying around $56. Now on average, our customers save around $741 per year. Now the customers love also METROMILE, with a lot of different people reviewing this positively. And all miles over 250 per day are free. So that's another thing as well. And we've got you covered with either collisions, comprehensive, and everything else, including roadside assistance, glass repair, and 24/7 support from our claims team. Also, filing a claim is easy. For a simple and easy experience, you can file your claim in app or online, and they will guide you through each step of the process. They can even expedite your claim with help from an AI-assisted team. So an app that puts you in control. You can view your trips, understand your car's health, avoid tickets with street sweeping alerts available only in selected cities, and find your lost or stolen car, all within the METROMILE app. And they're currently insured in Washington, California, Oregon, Illinois, New Jersey, Pennsylvania, Virginia, and Arizona. So that is at least the extent of their coverage at the current time. Now, who they are is very simple. They're a leading digital insurance platform in the United States with data science as its foundation. METROMILE offers its real-time, personalized auto insurance policies by the mile instead of the industry reliance on approximation that have historically made prices unfair. METROMILE digitally native offering built around modern drivers' need, featuring automated claims, complimentary smart driving features, and annual average savings of 47% over what they're paying with their previous auto insurer. So about METROMILE Enterprise, through METROMILE Enterprise, METROMILE licensed its technology platform to insurance companies around the world. The cloud-based software is as a service enables carriers to operate with greater efficiency, automate claims to expedite resolutions, reduce losses associated with frauds, and unlock productivity by employees. Now, basically, their presentation would give us a bit more of an insight. This one is updated on September 2021, so we're really up to date with this one. Digital insurance for a digital world. Now, some of the investments highlights includes, but not limited to, massive inefficient market. Incumbents are largely marketers with inequitable product offering. Unique customers value proposition. 65% of US drivers save average savings of around 47%. Data science driven economics advantage. Unique data and data science powers top line growth profitability. Also, industry leading unit economics. Profitable insurance operations today with expanding margin profile, scaling rapidly through proven channels, taking market share with unique acquisition models, significant insurance revenue upside, so large markets and high profits self-funds growth for many years ahead, significant enterprise software revenue upside, best-in-class enterprise software solutions already deployed and scaling rapidly. Now, they are a data science company and they are focused on auto insurance. They're also leading in digital insurance platform, up around $113 million in 2021 quarter 2 insurance premium run rate. That includes 1,181 2021 quarter 2 average annual premium per policy, around 71% of the first half of 2021 accidents year loss ratio, with around 2021 quarter 2 policies in force at the end of the year being 95,314 and around 4.2 million in 2021 first half enterprise software booked ARR. Now that's more than $3 billion or 3 billion of miles of data collected. Now, in all general kind of sense, auto insurance is unfair to most consumers. Linear relationship between miles driven and expected loss. 35% of drivers drive more than half the miles and cause more than half of the losses. And drivers are assigned to a class and all are charged the same rate. Now, within a class, there is a wide range of miles driven. 65% of drivers overpay for auto insurance. So the expected losses here, they're overpaying quite a significant amount, and some of them are underpaying, but the majority is overpaying. Now, we aim to offer what no one else can. Insurance you pay for only when you use it. So massive fragment market. That includes $250 billion US personnel auto insurance markets, around $700 billion of global auto insurance market, around $363 billion US P&C personal insurance market, and around $1.7 trillion in global P&C personal insurance market. No US carriers has more than 20% market share, and over 110 carriers with greater than $100 million in premium per year. So METROMILE is built for a changing world. Traditional insurance is unprepared for that. Meanwhile, METROMILE puts themselves as a digital-first insurance embraces this future. So they're built for individuals, dynamic vehicle use, high engagements, and high margins. Meanwhile, the traditional one is built for a class of drivers, static or car driver model, low engagement, and low margin. The only data science company in the world focused on auto insurance is this one here, at least that's what they show. That includes their METROMILE and their METROMILE Enterprise. Now, METROMILE is driving a digital evolution in auto insurance. First, you sign up, you get a quote, you buy. You can also try before you buy with the Ride Along app, and you can save up to 40% on that. And then you got METROMILE Pulse. So the device cost reduces by 26% at the end of 2020, and it basically makes your vehicle a connected vehicle. And then you can pay only for what you use each month. So it comes in around 6 cents per mile. Above 250 miles per day is free, and a flat fee of $29 per month as a fixed cost of operation. So if you drive, let's say, around 10,000 miles, you save around 310 per year. If you drive around 6,000 miles, you're saving probably around 683. This is just based on general averages. This really differs per city and state that you're in. Now, our consumers love METROMILE, around 47% savings, around 50 claims NPS, and a 4.7 App Store rating. Now, in general, METROMILE is sustainable superior unit of economics because you pay per mile, and honestly, I'm trying to, this is kind of sounding repetitive at this point, but this one here is multiple channel growth. You're able to see that accelerating existing footprint, 30% of US, expand nationwide, that's the next thing, scale partnership and ride along channels, grow enterprise software revenue, and cross-sell homeowners, renters, pet warranties, and maintenance. So around 45 million drivers can save with METROMILE today, and 143 million over the next 2 years, representing $160 billion of potential premiums. That is massive again. Now, so they are going on towards a growth kind of direction. Currently, we're going in, or we're almost finishing Q3 actually, and I think we did. This was in September. But direct-to-consumer expansion, population expansion through response and conversion improvements, new fintech partnerships, including 5 million customer base, and in the last quarter of 2021, filing in new states planned to reach around 50% of all Americans, and brand reintroduction, game-changing in-at-home worker opportunity with re-entry into the top of the funnel channels, including video, social, audio, and OOH. So they're bundling auto insurance with homeowners, lets us expand into a new, larger market. So that is something as well. 56% of US insurance consumers bundle their auto and home insurance, and bundles have 2 times the 10-year off monoline auto insurance customers. So on here, you're able to see that you have the option of independent agents that add incremental profitable policy growth while enhancing awareness. So independent agents offer low upfront CAC, higher retention rate, highly complementary distribution, enhanced ability to reach homeowners. The only disadvantage for this one, which might be an advantage for some, is lower annual contribution or net of commission. So they have an improving unit of economics. As you get to see, the accidents year loss ratio is on average, at least in 2020, that was COVID, was 57%, currently going back to 71%, but accidents year contribution margin is currently at 2% in the first half of 2021. So I hope that kind of gives you an idea on who they are. Some of the recent highlights including METROMILE Enterprise integrates Dwallo to automate insurance claim payment, which is again into their automation thing. But if you were to take a look into the latest SEC filings, we can do that. But before doing so, make sure if you've enjoyed this video so far to click the subscribe button on the bottom right corner and leave notifications on. Also, don't forget to drop a like to this video as it helps my channel quite a lot. And you can join our Discord totally free in the description below. Now, basically, up to around 50.8 million shares of common stock would be issued. Now, this represents quite a massive amount. It says this prospectus also relates to the offer and sale from time to time by selling security holders named in this prospectus, around up to 50.8 million shares of common stock and up to 180,000 shares of common stock that may be issued upon exercise of placement warrants, and up to around 2.76 million shares. Now, why am I mentioning this is because the entire shares outstanding is around 126.69 million shares, with the shares flow being 77. Around 50.8 million shares, and that is still a quite significant chunk of the previous two values I've given you. Now, in terms of institutional buyers, what we get to see here is that there is some significant institutional buyers activity, including Intact Financial Core. And I'll show you, actually, let me show you right now. So Intact had a different document before for their customers and everything in between, and I've seen that quite often. But basically they say Intact Ventures also made a strategic investments in pay-per-mile car insurance company METROMILE Incorporation in 2016. METROMILE offers its customer a pay-per-mile insurance, and basically they're talking that they think that this will ultimately enhance the customer experience, and they believe that this investment will continue to help us expand their core competencies. So that was back in around 2016. This is kind of a document I pulled out with Intact, so it does show continuation, or you're able to see how long they've been supporting these guys, all the way back from 2016. Now, you're able to see other names as well, like Hudson, Structured Capital Management, Luxor Capital, and a bunch of others as well. Coming in from the smaller positions, such as Versa Capital, they did liquidate around 50% of their entire shares, but I've seen them liquidate a bunch of shares, different companies, although the Bank of America increased their position by around 20%. Now, on other things, is the short interest side. The short shares available for this one is around 1.1 million, with a very low short borrow fee rate, showing currently that the short volume rate on the last trading day was around 24%. So short selling activity isn't really significant for this one to consider. Now, on the other side, this is another kind of piece of information. This is a newsletter, and it does talk about METROMILE and its significance to consumer. Now, this was actually in a paper that said how artificial intelligence is changing the insurance industry at the National Association of Insurance Commission, and there's a bunch of these kind of papers. This one was actually back from July 2017, and it really shows you that this company has really made headways around in that industry. Let's move on towards technical analysis now. Now, from a technical analysis perspective, there is a lot of interesting things that we can pinpoint. So the technical indicators in general, the stock has been really dropping all this way since June 2021. I mean, even if you were to consider their initial IPO back early on in the year. But currently, things are kind of trading sideways, and it's really overdue for a push. But the thing is that this stock seems to be continuously beaten up. I mean, if we were to consider something like the price over book, it's sitting at 2. The SP 500 average is around almost 4 point something. So it's definitely halfway through that. And to consider, it's probably, I would say, half as undervalued as the SP 500. And in order to meet that valuation, you would probably would probably see the stock double in price. Now, this stock is currently trading around 414. There's not a lot of volume, not a lot of action happening into this one, although the strategy and investment itself in terms of the company does seem somewhat lucrative in terms of the exposure they have and their backings from other companies, including Intact, that has their own insurance division since 2016. Now, on the Willy percent R, you're able to see that this one, which by the way, it's very similar to the Relative Strength Index, also known as RSI, is showing that it's highly oversold. And on the MACD and momentum, it's very sloppy, almost around 0, so not really indicating anything, but it's suggesting that this one can easily start up a trend. Now, on the stochastic fast and stochastic slow, we're able to see that both of these are kind of pinpointing upwards, suggesting perhaps a good time to buy would be sometime soon if this one was to go upwards higher. And it is kind of curving upwards, suggesting that that could be the move. On the moving average bands, this one is expected to trade between 462 and 378. And if we were to take a look into the Fibonacci retracements, we're able to see that the significant support here is 381, resistance is 772, 1014, 1210, 1406, and 1684, and 2039. Now, if we were to go ahead with just price line actions, we're able to see that there's a significant support at the $4 and then the 381. So it's really at a bottom up or bottom down value. You can't really, or theoretically, it can't go lower, but we could have said the same thing when it was here and it dropped from around $6 to 381. Now, in terms of resistances, there's a very strong one at the 432 level. Above there, 483. Above there, 531. And then above there, 668. And then above there, 725. And then above there, around 778, going upwards to 872. And then 958. And then upwards to 1087, going higher to around 1205. And then around 274, going upwards to around 1430. And then around 1494, 1545, and around 1714 and 1784, upwards higher to 1931. Comes to the question to Ed, what do you think is going to happen here? Well, honestly, I would have said around this time to probably be good investment. Currently, it's curving upwards. It might actually lead to a bit of a higher price point. Perhaps could be around back to the $5. But I do see that this one is not really satisfying a lot of the institutional buyers and long-term buyers. Going from 2039 to around 1/5 of that to around 414, that's quite a massive drop, around 80% drop to be specific. If we were to go ahead with a trend line, you're able to see that this one would go all the way down in almost a really massive trend line around, to be specific, well, it's saying 413%, but it's not, it's around 80%. So that on its own is horrific. Now, in all honesty, I do think that the strongest resistance this one will meet is around 674. It could be a longer term investment. It does look quite interesting. I see that a lot of technology and a lot of consumers are going towards paying per mile, especially in urban cities. And as we move away from suburbans and into smaller urban cities or bigger urban cities where everything is around your corner, I do see this one to be quite a significant investment. Now, I think that the drop with this one here was mainly between the 2021 and 2020 kind of comparison. 2020 was kind of a COVID year. People weren't moving much, so the current percentage of accidents are less. But as we get back into the road and a lot of people forgot to drive during 2020, it would show in an insurance company like this one. So that's mainly the indication on why the first half of 2021 doesn't look as good as 2020. Now, what do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.